All right, today we are digging into a trading strategy that's, well, it's not really about predicting the news or finding some kind of magic formula. No, this is all about psychology. It's about playing the market's mind game. So let's just start at the very beginning, right? With maybe the most fundamental question any trader could ever ask. What really makes the markets move? Your first thought might be, oh, it's the news, or it's all these complex algorithms now, or maybe some secret math formula. But what if all that stuff, what if those are just pieces of the puzzle, and the real driver is something else entirely? And that's the core idea we're going to unpack today. The idea that, honestly, most traders are playing the wrong game. They're looking for certainty in the numbers, when the real clues are hiding somewhere else completely. I want you to think about it like this. The market, it's actually a lot like a poker game. I mean, you could have a great hand and still lose, right? And a pretty weak hand can end up winning the whole pot. So how does that happen? Well, it's because it's not just about the cards you're holding. It's about reading the other players. Are they confident? Are they bluffing? Are they totally stressed out? This strategy says the market works the exact same way. And that brings us right to the heart of it, price. It's not just a number on a screen. It's way more than that. It's a direct reflection of human emotions, fear, greed, hope, all of it playing out on a massive global scale. See, a market isn't some mysterious external force acting on us. It is us. It's literally the sum of every single decision made by every single trader, every single moment. You could almost think of it as a kind of collective mind. So then, what actually causes price to move? Well, it goes way beyond just simple supply and demand. It's about urgency. It's that gut feeling of, oh man, I have to buy right now before it goes higher, or I have to sell, I have to get out now to stop the bleeding. That raw emotion, that's what creates those really powerful, explosive moves you see on the charts. Okay, so here's the big paradigm shift. Most traders, they just see a line on a chart, right? A technical pattern. This method, it teaches you to see a story. That sharp drop you see, that's not just a downtrend, it's a story of panic. And that sideways choppy movement, that's a story of indecision, of tension just building and building right under the surface. And this right here is the strategic goal. It is not about predicting the future. It's about identifying that exact moment when a large group of traders suddenly realizes, oh no, I'm on the wrong side of this market. Their frantic rush for the exits, that creates a powerful wave of buying or selling, a predictable flow of orders that you can actually ride. Now, I know what you might be thinking. This all sounds pretty intuitive, maybe a little fuzzy, but the method is actually very systematic. It's a structured process for pinpointing these psychological flashpoints in the market. So the whole thing starts with an initial analysis. You're not just staring at lines on a screen. You're defining the market's overall structure, its trend. You're getting context. You figure out where the market is showing strength or weakness, and from there, you can start to anticipate where that psychological stress is most likely to build up. Okay, so once you've got that context, then you can start looking for specific patterns. And look, these aren't magic signals. Think of them more like visual footprints left behind by traders who are under a lot of pressure. They're the evidence, the proof of the stress we've been talking about. All right, first up is what's called the test setup, or TST for short. Just imagine the market pushing up to a key ceiling, a resistance level. It tries and tries to break through, but the buyers just lose their nerve and it fails. That failure, right there, is a really clear signal. It tells a story of exhaustion, of a collective feeling that prices just can't go any higher, and that often comes right before a move down. Next, we've got the breakout failure, or BOF. And oh man, this is a classic trap. So price breaks a key level, and a ton of amateur traders pile in thinking this is it, it's going to the moon, and then, bam, it slams right back down, trapping every single one of them. The frantic selling from those trapped traders, all trying to get out of a bad position at once, that's what fuels the powerful reversal. This is a perfect example of trading someone else's stress. Then on the flip side, you have the breakout pullback, or BPB. So here, the market breaks out, but then it comes back to retest that same level. When it holds, when it bounces off that level, that's a powerful confirmation that the breakout is for real. And now, think about it. All the traders who were short, the ones who bet against the breakout, they're feeling the pressure. Their stress, and when they finally give up and cover their positions, well, that helps propel the new trend forward. And finally, there's the simple pullback, or PB. Honestly, just think of this as the market taking a quick breath. During a really strong trend, you'll see these small corrections. They're just a moment of temporary doubt, or maybe some people taking profits. For a savvy trader, these little dips are often the absolute best opportunities to hop on the dominant trend before it takes off again. So look, you can learn to spot all these patterns. That's actually the easy part. The real opponent in this game, it's not the market. It's the person staring back at you from the screen. This gets to the absolute heart of what trading is all about. You know, the chart always looks so obvious in hindsight. It's easy, but in the moment, at the right edge of the chart where the next candle hasn't even formed yet, there is nothing but uncertainty. Real success is all about your ability to execute your plan calmly despite the feeling of doubt and fear, which, by the way, are completely natural. And look, mastering that internal game, it doesn't just happen by accident. It's a process. Becoming a consistently profitable trader is a real journey, and it's one that moves through very deliberate stages of development. First, you've got to start with the foundation, learning the concepts. Then you move into a simulator to practice without any real risk. But here's the crucial next step. Trading live, but with the smallest possible size. This is so you can get used to having real emotions in the game, and only after you prove you can be consistent there, only then do you gradually, slowly increase your size. It's a disciplined, step-by-step path to mastery. And this all leaves us with a final thought. The patterns for reading the market's mind, they're actually pretty simple, but they're completely useless if you can't control your own mind. So the ultimate question every trader has to answer is this: can you master the one opponent who truly matters most? Yourself?